Are you paying too many fees in your 401k? Are you diversified enough with the correct asset allocation? Here's a cool little tool that I recently found that might help. Welcome back and welcome to the channel. I was recently introduced to this neat little tool. It's an online site called Bloom. I'll put their little thing up there. And what this will do is go into your 401k, wherever you might have it, whether it's at Fidelity, Vanguard, Charles Schwab, and take a look at what's actually inside your 401k. And we'll do this with IRAs and Roth IRAs as well, and see what is going on in there. And it will take a look at your fees. It will look at your asset allocation and make sure that you have a nice mix of bonds to stocks, depending on when you're planning on retiring. And it also is going to make sure that you're pretty well diversified into both, like say, international as well as US economies. And today I'll walk you through this tool, and I'll use my 401k and my Roth IRA over at Vanguard as guinea pigs to show you how it works.
Okay, and here we are at the main page of Bloom. It's Bloom, it's because it's got 3 O's. So we'll click Start Now. And Start Now again. Put in a name. Alright, I'm just going to randomly pick these. I use the right date. And let's say you're going to do retired 50. Just for the heck of it. Add an email address and create account. And I'm going to select the 401k and the regular IRA. Go to Next. Okay, so what about risk? I'd say I'm pretty good. I've got the basics down. Let's keep going. Alright, a company that made average pay increases, bigger pay was, you know, I'm good with this. I can get extra sources of income. So yeah, let's go with some more pay. Take some risk. Taking in some sights, skydiving, chilling at the beach. You know, I actually like both of these. It kind of depends, but if I had the choice, I'll do a guided tour. They'll know more about the place than me. And I can lounge on a beach anytime. My retirement balance has declined 20% in the past 3 months. What would you do to my contributions? Rarely check on it. Increase, increase, please, because that's when they're on sale. And you turn on the news and you hear that the market has dropped 200 points. Which is the best of your response? New schmooze. Buy, buy, buy. Pull out. Buy, buy, buy. Thank you. Wasn't that an NSYNC song? Buy, buy, buy. Okay, let's talk risk. Based on what you shared, we think this is a good mix. Can I move this? Yeah. I like 90-10. 84. I'll stick with this. I'm okay with taking a little bit more risk right now. We're kind of still a little bit young, so I'm interested in making some more risks on that one. So now what we'll do is I'll choose where I have the retirement account, and right now the retirement account is at Vanguard. And we have the Vanguard investments. Yep. Okay. Okay, so I entered my username and password, and it found both of my accounts, my 401k and my Roth IRA, which is good because they're both over at Vanguard. So I will go ahead and select the 401k first to analyze. All right, so it says my fees are doing pretty good. I could use some benefits for some risk adjustments as well as diversification. Now there is what's called a target date fund in there, and I will go over that here in just a little bit. But let's see what it says there under next. All right, I've done a good job. I have a 0.07% on the expense ratio as opposed to 0.38%. So I got a green good job. Cool. On my fees. Risk assessment. Currently I have 0 stocks, 0 bonds, 100% miscellaneous. Okay, so this is not quite right. Let's see next, because that's not really what I have in there. I do have stocks and bonds in there. And it says target date 100%. Okay, US large cap, international stocks. It says I need this. Yeah, that's my diversification assets. Okay, I think I know what's going on here. Then if I hit next, well, this is kind of interesting. But there's something I need to address first.
So target date funds, or what I have in my 401k, are kind of a fund of funds, if you will. I've used this example in other videos before, but let's say I have a bunch of companies like, I've got Walmart and I've got, Yahoo, maybe I've got, some Disney, and they're all in a giant kind of like bowl or soup. This is called a mutual fund. And if you have a bunch of bowls all in a collection, that's basically what I have over at the 401k. It's a giant portfolio of mutual funds. Now, the cool feature about target date funds is the target date is when you're planning on retiring, or somewhere around there, within plus or minus 5 years. And what the fund will do is start out with a high allocation of stocks, which are more risky, and then a lower allocation of bonds. And then as time goes on, as the years go on, it will shift that allocation more towards the bonds and less towards the stocks as you start nearing retirement age.
This is what I have in my 401k. It is the Target Retirement 2050 Trust 1. And it has balances of stocks and bonds right here. And it's for people that are basically retiring around between 2046 and 2050 on average. This is the expense ratio of 0.07%. That's what Bloom found. But what I really want to show here is it's got a pretty good risk. Is down here is this portfolio composition. This is what Bloom can't see. So I am invested into the stock market, basically the United States stock market, around 54%. I have international stock at around 36%. I also have bonds in the United States economy at around 7%, and international bonds as well. And so what's going to happen, though, is as time goes on, this account and this fund will naturally start to shift the allocation from stocks more into bonds. So I am invested in this stuff. It's just that Bloom can't see this. Right, back onto Bloom. What I thought was kind of interesting is if I take a look at the advisor costs, that's kind of expensive. Average investor, yeah, that's pretty cool. All right, I can kind of come down here. Looks like I can adjust these things. Annual contributions. Refresh. All right, that's pretty cool. All right, so it kind of gives you a little outline and projection. I know this is geared more towards Bloom's services to kind of convince you to sign up with them, but what is next? A little wavy flower. And okay, so this is where you would sign up and everything. This is a pretty good way of evaluating, at least when it comes to fees, diversification, and any other kind of, I guess, allocation as well. Let me go ahead and take a look and see what Bloom thinks about my Roth IRA. Right. So I log back into Bloom, and let's go ahead and take a look at the Roth IRA now. Okay, so about the same thing. So I've done really well with fees. I could use some adjustments in my risk as well as my diversification. Okay. Go next. All right, there's the 0.04%. Yeah, that makes sense. That's because it's VTSAX. Next. Yeah, so VTSAX is 100% invested into stocks, and they recommend a little bit less because they want some bonds in there. I'm okay with it right now. And yeah, VTSAX is all U.S. large cap, and it's recommending a couple. I could put some international in there. I mean, yeah, it is 100% invested into U.S. stock. I'm not quite sure, though, if I want to do international, just because there's nothing really there that's really striking my fancies. If I go next, and we're back right over here. Cool. Okay, let's say I'm in the market and I want to add some international funds into my portfolio. So let's see what the market has. Okay, how about this thing? It's an ETF. It's the first thing I just saw, so just grabbing it for the heck of it. Okay, so this is an international stock ETF. And okay, so this is what I was saying, is that it does cost money in order to add that diversification into my portfolio. Not that much, but it is going to cost me. And I have to think about it. Is that worth it? Is that worth the extra cost for that diversification? Is it really going to end up helping me out? Right now, I'm not really quite too sure. Let's see, how is this? It's got some more risk involved with it. Not too bad. And this thing is really young. Wow, it's not even 3 years old yet. This thing isn't even potty trained. Okay, so all right, I didn't realize this. So Okay, so it's really, really young. It has really high risk, but it hasn't even seen a bad market. Well, it's seen the 2018 crash, or well, the 2018 drop. So that's not too bad. But this thing is way, way, way too young. So I would never invest in this just on that fact alone. But the main reason I was bringing this up was because it is going to cost extra money and have other expenses associated with it in order to put that into my portfolio. And as of right now, I just don't see the value of it. I will do this probably later on, maybe even in some bonds to smooth out the ride a little bit, as well as add diversification. But for right now, in the Roth IRA, I'm going to go ahead and stick with just VTSAX.
The Bloom site is a really unique tool, and I definitely recommend giving it a shot if you have a 401k or even an IRA that you want to have it analyzed. All you have to do to sign up for an account is have an email address, but if you were like me the first time I did it, I didn't want to use my real email address, and that's perfectly fine. You can just use any old email address, and it will allow you to continue to the next steps. And the security is all there as you log into your Vanguard or Fidelity or Charles Schwab, and then Bloom will have a peek at what you have invested. I definitely gained some insight into that, and within a couple of years, I'll be adding some bonds to the IRA, so this way it'll help smooth out that ride just a bit. And above all, make sure that you're investing in what you want to invest in and that you're making your own decisions based off of what's important for you and your family. Thanks for watching.